BHEL rallies on a 7,000 crore rupee order win. Hello and welcome to Markets Forward, your go-to show where we tell you all that went on in today's trading session. We'll also gear you up for tomorrow's trade. I'm Nigel D'Souza and joining me as always is Surbi Upadhyay. Hey Surbi.
Hi Nigel. Well, interesting day. The bulls kind of wrestling control back from the bears all over again and a pretty green screen by the end of it.
Well, that's right. And in the next 20 minutes or so, we'll tell you all the big news, the key developments that took place on the Lal Street today. We'll also get you some top corporate voices that we spoke. But let's kickstart the show with all the day's action. Well, let's sum it up then, a quick few lines then in terms of today's action. The Nifty opened close to around 22,800. And by the close on averaging, we ended at around 22,820. One would say, if you were carrying a long position and if you booked in the first minute itself, you'd be quite happy because we actually ended where we had opened up. 22,800 is the open, 22,820 is the close. But it's good that at least we saw a follow-through session after the massive pullback that we saw in trade yesterday. And it was a good day in trade. Nvidia overnight went ahead and hit $3 trillion of market capitalization. It was up close to around 6% overnight. So big move is what we saw out there. And it had a positive rub-off on the tech names. In fact, for this week itself, the tech names have been the big outperformers. That index is up close to around 5%. And in trade today, you had a lot of the stocks that were doing well. But I think your portfolio will feel very, very good today. Not because the Nifty was up at around 22,800, because the breadth of the market was absolutely splendid. 6 stocks were gaining for every 1 stock that was declining. And that's what makes your portfolio feel very, very good. That's the mid-cap index. But I think the crisscross lines or the advanced decline ratio will tell you the picture. And I think it was that sort of a day, right? Maybe the headline index will run into some resistance at higher levels. But this is a stock-specific market. You pick your stock, you grab on, and in fact, you'll be making some good money.
Absolutely. And, the market can also be a place of extreme sentiment, Nigel. And we're seeing that play out in terms of the way the stocks are rotating and the sectors are rotating. And we saw that again today. I mean, at the index level, as we've been saying, it was a good day. In fact, the intraday high for the Nifty was above 22,900, 910 to be specific. We fell a bit, but there was a buy on dips constantly taking place. So finally, the last wave of buying that came in, took the Nifty to the 22,800 mark. Now, sector rotation, that's what this market's become all about. Till yesterday, there was this rush to safety. Everybody wanted to buy defensives, FMCGs with the toast of town. Guess what? Today, that reversed. Today, the favor was back with the more aggressive economy-facing stocks, whether that's PSUs or some of the other CapEx names. And we'll talk about these stocks as we go along. In fact, it was the PSE index, the CPSE index, and the PSU bank index. I mean, these were the ones that were really leading from the front. And even a sector like real estate, good gains coming in over there. So once again, basically economy-facing PSU, aggressive CapEx, that theme was back on today. And what was getting sold off was actually FMCG and pharma. Both those indices were down a bit. And if you look at the Nifty, the stocks will actually mirror that kind of sectoral move as well. In terms of numbers, the Nifty now, after all of this drama, the choppiness and volatility, is just 2% away from the all-time highs once again. But the CPSE index is still off a good 11% from the peak. So that's been the extent of the price damage that we've seen. The focus going forward obviously is all about the swearing-in ceremony and then the allocation of cabinet berths, who's getting which ministry. That's really going to captivate the market's mind over the next couple of sessions. But let's get started because we have plenty of ground to cover. Lots lined up for you on the show as always. And here's the lineup. We'll start, of course, with all the key movers and shakers. Vivek will tell us in more detail about those sectoral trends that we've been talking about. Lots of stocks on our radar as well. BHEL rising on the back of order wins. Century Textiles in focus as it's looking at a joint venture in Gurgaon for real estate development. Uno Minda was sizzling away on a partnership. We'll tell you all about it as we go on. Last but not the least, of course, all the key events to watch out for tomorrow's session as well. But first, let's talk about this green screen. Vivek is here with all the moves and shakers. Vivek.
Well, thank you so much for that. Spoiled for choice today in terms of, which are the stocks to pick. We'll go sector-wise. One particular sector today that saw significant up move was the IT pack, and even within the IT pack, exaggerated moves were seen as far as the mid-cap IT names are concerned. So look at the entire pack today. Have a look at names like HCL, Zenza Tech, Sonata Software, 1 point, very, very high, cooling off a little bit towards the end of the day. The next set of stocks that did quite well, while the large cap pharma names saw a bit of profit booking today. The mid cap pharma names and within that select names actually saw quite a bit of buying frenzy. Especially have a look at name like Biocon up 9% in the session. Granules too up almost over 6.5%. Glenmark Pharma too in the last hour joined the rally as far as the pharma pack was concerned. The other set of stocks that did quite well, one that we've been alluding to, is the infra and the capex led themes. So have a look at the infra names. L&T, leading the rally up over 2%. Have a look at KNR Construction. Last 3-4 trading sessions, the stock has gained significantly. NCC Limited, PNC, NBCC on the back of an order win. All of these stocks saw stellar rally and stellar gains. The other stock on the radar was Century Textile. In fact, today was quite a good day as far as the entire Birla Group was concerned. Century Textile, inking a pact out to go ahead and launch a real estate project in Gurugram with a revenue potential of close to 5,000 crore. The stock rallied almost 14.5%. The other stock on the radar, Minda, again, inking a JV with an Innovant subsidiary. Now, what's actually happened is that brokerages believe that there could be more content per vehicle as far as Minda is concerned. Brokerages have gone ahead and raised the target multiple along with the target price for Minda. PSU set of stocks, whole host of stocks, won't name all of them, but some stocks that caught the eye in terms of the kind of rally that you saw. PSC REC up another 5.5%. The two shipbuilders, Masco as well as Garden Reach, both up over 10%, and Hindustan Copper too held on to its gains of over 5%. On the other hand, like you mentioned, the FMCG stocks cooling off a little bit after the Stellar 2 rally. Honasa amongst the top laggards. Avenue Supermarts, DMart too seeing a little bit of a cool off. The other stock that saw a bit of a cool off was Sun TV. 2 days of significant rally, but today the stock cooled off around 4%. And lastly, Hindalco yesterday, despite the kind of negative news flow that came on back of the IPO being called off for Novelis, the stock rallied yesterday. Today ended as the top Nifty laggard.
Okay, all right, Vivek, thanks for that neat list. Well, joining us on the show today, we have Shilpa, Rout, as well as Gurmeet, Chadha, who joins us on the show. Hi, lady and gentlemen. Thanks a lot for joining in. Well, Shilpa, I wanted to ask you first, how do you approach this market? A few sessions ago, we were on the verge of breaking the 200 DMA, went down to around 21,300, and surprise, surprise, we may end tomorrow at around 23,000. On the charts, how are things looking? 22,800 is what we conquered today.
If you put up this way, today we actually saw some gains. If we compare the market that we saw last week on Friday, we can actually assume that Monday, Tuesday, and Wednesday literally didn't happen, because on Thursday we were actually, Wednesday we were actually there where the Friday closing was happening. So today we can assume that it is a fresh day after that Friday we saw. So from here, if you see that 23,000 will act as a resistance, because it will be a psychological barrier as well. And from here, if we sustain above 23,000, then you talk about higher levels of 23,400 to 700 again. But tomorrow, I guess, you will see some sort of profit booking coming again and again at those levels. And support also is coming at around 22,500 zone. So this 500 points of, trading band for Nifty is something one can look forward to.
Okay, all right, got that. Thanks very much. Stay on, we'll have some more questions for you. Let's also look at some stocks, and then we'll also get Gurmeet in and get his view on a lot of these movers and shakers. BHEL was rallying almost 10% higher. Well, for starters, there was a lot of positive sentiment around PSU stocks once again. And then they'd had specific news around it as well. The company has bagged an order worth 7,000 crore rupees from Adani Power to set up thermal power plants in UP and in Chhattisgarh. Let's head back to Vivek for more details on this. Vivek?
Well, that's right. A good day if you are a thermal power producer or a supplier. So BHEL, once again, when you're talking about BHEL, the order book is extremely strong. Right now, the order book at the end of Q4 stood at over 1.3 lakh crore. That's very high. And today, another 7,000 crore has been added. So the company has received 2 sets of orders from 2 subsidiaries of Adani Power. The first one, like you mentioned, is in Uttar Pradesh. The company will be supplying equipment of boilers, turbines, generators, and associated ancillary equipment, along with O&M. And the company expects this particular order to be worth over 3,500 crore. Similarly, the scope of work is quite similar when it comes to Chhattisgarh. Over here, once again, the supply is for a 2 into 800 megawatt, that is a 1600 megawatt power plant that will be set up by an Adani Power subsidiary, and the equipment supply of boiler, turbine, generator, and associate auxiliaries is what BHEL will be doing. Over here too, the order size is over 3,500 crores. So very strong order wins coming in. On the back of that, the stock surged in this trading session today.
Okay, all right, Vivek, thanks for that. Well, Century Textiles as well, that was the other stock that was flying away. This after it announced that its realty arm Birla Estates has entered a joint venture to develop a project in Gurugram. Sonal joins us to fill us in with those details. Sonal, tell us more.
Well, the revenue potential is something that the streets seem to like, and also expansion in the NCR region. To give you the news first up, Birla Estates, the 100% subsidiary of Century Textiles, has inked a joint venture with Barmalt India Private Limited. This is to develop 13.27 acre of land parcel. This is for a luxury park in Gurugram, and the development potential of this particular project will be 2.4 million square feet with a revenue potential of up to 5,000 crore rupees. So that's a big number that the company is talking about. Additionally, they talk about expanding their reach in the NCR region, which has been growing much faster than the other markets as well. Remember, the stock is up already 67% this year, and this addition is something that is liked by the stock market as well.
Okay, all right. Thanks a lot for that, Sonal. Well, Gurmeet, you come in. You tell us any view on either of these two names, BHEL or Century Textiles, or something that you like from both these two spaces.
So, Nigel, we like the power space. We, in fact, play the complete value chain in power space. BHEL, unfortunately, there's a bit of lack of consistency in the way they report numbers. Last quarter was a bit of a surprise. But, in general, I think we're very constructive on this sector. I don't think so much will change as far as, the new government comes in. What we like more right now is NTPC and Power Grid. NTPC almost has now more than 70,000 megawatt of installed capacity. They have a clear vision to get to 130, 140 gigawatts, and of which they want 40-45% from a renewable base. They also have plans to hive off their renewable energy business, which in my view should lead to very decent value unlocking. Still at about 18 times, 5-6% kind of dividend yield. I think this something gives you margin of safety and growth both versus a lot of names which have run up too much in PSU space, whether it is defense or so that's something we like. And we like Power Grid, again available 18 times, 17, 18 times. And there is a opportunity of almost 2.5 lakh crores worth of transmission lines, which will come over the next 4 or 5 years. They have like 65% market share, and the government stake is already 51%. So not much supply pressure as far as equity stake getting diluted is concerned. So these two names we like more from a PSU basket as far as the power value chain is concerned. And there are other ancillaries which we have in the book.
Okay, all right. Since you were mentioning PSU, Gurmeet, let's focus on some of those names. It's been nothing short of a wild ride for this PSU stocks. We had a bit of a rally. The stocks came under pressure on counting day. Hormuz joins us to shape all of that up for us. Hormuz, take it away.
There was a time when PSUs were all over the street and everyone spoke of nothing but PSU stocks. Now, the street darlings as they were, so retail investors pile into this momentum at whichever price possible. The result is there to see. Now, take a look at this graphic that comes up on your screen. Now, these will be the top 5 gainers on the Nifty PSE index starting 2023 until the 3rd of June, which is a day before the Lok Sabha election results were declared. REC and PFC are up 5x, HEL up 4x, BHEL, Oil India also among the performers. Now, there are other non-index names as well which have risen anywhere between 300 to 400%. But one election result has changed everything. Now, the BJP fell short of getting a majority in these recently concluded elections, but the NDA did. Yet, PSUs were the worst hit. Now, in the blink of an eyelid, the street suddenly began to question this up move. Now, these are some of the views here. MK said that they are exiting all PSUs and companies with weak earning structure. UBS said that these rich valuation assumptions might come under question because they are underweight on the Indian market overall. CLSA has not written about the PSU space as a whole, but they downgraded BEL. They said valuations are expensive there. JM Financial has a buy recommendation on SBI, but they said that there is a case of a valuation derating that may emerge, but that is only when macro risks emerge and a relapse of credit worries. Jefferies was also one of the big overweights on PSUs. It has cut that overweight position as well. Now, HDFC Securities also said that it is expecting some PSUs to see a contraction in their multiples. Now, the result is there to see in this instance as well. REC and PFC, both of them fell over 20% on the 4th of June. HAL, BEL, Oil India all declined 20% that day. The list does not end there. Now, Concor is a disinvestment candidate. GAIL, ONGC, NTPC, all of them fell anywhere between 50 to 20% that day. But there is some bit of recovery starting that day itself, and it continued through yesterday and today. Now, REC and PFC are up 20% from their respective lows, as are BHEL and SAIL. But despite this slight recovery, most of these stocks are still well away from their recent highs. REC PFC hit almost levels of 600 600, but they are yet to cross 500 after Tuesday's drop. Same is the case with BEL, BHEL and most of the other PSUs as well. Lastly, the extent of this run-up was such that despite such a drastic fall on Tuesday, most of these stocks are straight well above their 5-year average. Now take a look at this. REC and PFC are well above their average, as is BHEL. SAIL, BEL at 50 times is also above its 5-year average of 31 times. So PSUs were in the news then the news now. Reasons may have changed, the narrative may have changed, but eventually the investor, just like the voter, has the final say.
Absolutely, that is true. Horbaz, thanks very much. Yes, it's been a fast-moving set, these PSU stocks for sure. Thank you for that analysis. Gurmeet, before we let you go today, we were just talking about Century Textiles doing this real estate expansion in Gurgaon and see what's happened to the stock today. You tell us, and real estate anyway came back with a bang. I mean, the market was looking at the risk-on mood once more. Now, if you want to play real estate, would you still look at some of these developers like Gurgaon? I don't know if you've had a look at Century Textile. If yes, give us a view there as well. But basically, real estate and what you're seeing around you in NCR.
No, I think I'm constructive. Reason being, we will have a reversal of rate cycle, and we look long term. We don't look at what's happening on an immediate basis. Also, the model is changing. Everybody is only focused on development. I think DLF is probably we need to have a rental portfolio which gives you regular cash flows. We met some time back the Suntech reality promoter. He was talking of how he wants to move now going forward. Right mix of commercial, residential, focusing more on premium segment more versus a more affluent segment earlier. So a lot of developers are now changing the business model. RERA has done its bit. So we are positive selectively in that space. Also, what has happened is we had existing inventory being sold during COVID, and then we saw a lot of new launches now in last 1 year. So a lot of civil work is right now going on. So the home improvement demand will come, with a bit of a lag as the civil structures takes place. So people who haven't done well, like the Kajaria, the Serra sanitary where last 1 year has been a little soft, that could become a part of the portfolio as well. So I'm pretty constructive. We've been very constructive even on Polycab, and all of that happened, including the tax non-compliance. So I think this is a very secular theme. You have to probably keep rotating between developers and home improvement depending on which cycle you are.
Got it. That's a good point. Yeah, some of these home ancillary stocks, they've not run up as much as perhaps the builders themselves. So that would be a good idea as well. All right, Gurmeet, thank you very much. And thank you, Shilpa, as well for joining in and giving us some perspective on trade. We do have to slip into a quick break today, but come back on the other side and we'll tell you about some of the top corporate voices and the commentary that we picked up today. Welcome back. As promised, let's move to a lot of the interesting corporate commentary that we picked up during the course of the day. Now, Uno Minda was up almost 15% to at times 18% during today's session. This after the company said that it had partnered with Suzuki Invoance Automotive to strengthen its electric four-wheeler portfolio. We caught up with the company's group CFO, Sunil Bora, who said that they would see a 20% EV passenger absorption as the company moves forward. Take a look.
20% will definitely be a number, maybe 2030 or 32, because what we see as of now, there are projections of 17% by 30, 20% by 30. Everybody has different assumptions, and that's why I said normally we don't comment on the penetration or the volumes. But yes, as we move forward, I'm sure market will see at some time 20% penetration as well. In terms of margins, I would say a little early to comment on, because as of now volumes are very less. But as we move forward, as we build scale, as we achieve those kind of revenues, we do expect the margins to be broadly in line with our average margins. But yes, they are as of now a little lower.
Well, CG Power will follow into the consumer business by selling appliances. That's the word that's coming in from Murugappa Group's Vilayan Subaya. Speaking to Shireen Ban from the sidelines of the EY World Entrepreneur Awards in Monte Carlo, where he is representing India, he said that he was betting big on electric mobility and semiconductor business. However, he ruled out any acquisitions in the near future and bets on organic growth and partnerships. Let's hear him out.
A new business that we're adding in that mix is the consumer business, because a non-compete got over in 2021. So that continues to have a lot of opportunity. For the consumer business, we basically start with fans and pumps and kind of, the more general electrical appliance areas, and then look at new areas for growth beyond that. So for the first couple of years, we'll just be establishing a beachhead in those areas, and then we start looking at what we can do from a growth perspective. Government has been very, very fast with all of its approvals. We've just started the design and building of the factory in Gujarat, but these are quite complex factories to build. So our estimates are it'll be 2026 before we can basically start operations at that factory. But we're kind of going full steam ahead. We've got I would say over 50% of the senior level memberships of the team basically recruited, and we're basically working on the design and build at this stage.
Okay, so those were some of the major corporate voices that we had on the channel today. Before we wrap, as usual, it's time to tell you about the key events to watch out for tomorrow. Manglam is here with the list. Manglam.
Well, so the most important event to watch out for tomorrow, of course, will be the RBI policy. But from a market standpoint, it may perhaps be a non-event because, the street is not expecting much. It's a status quo, which is expected on both rates and stance. Maybe a more calibrated view from the RBI post the first budget of the newly elected government will be extremely important. And that brings me to the second cue, and that is something that the market will be watching out for. All the political events. The NDA Parliamentary Party meet tomorrow at 11 a.m. All NDA CMs and deputy CMs will attend. Whether there is any clarification, commentary on whether the swearing in happens on the 9th of June, etc., would be extremely crucial to watch out for from a market standpoint. Then the IT space, TCS will be in focus. Of course, they're holding a press meet on artificial intelligence. The FMCG pack has also been in focus. So commentary from Marico at the investor meet at JP Morgan conference will be extremely crucial, especially when it comes to the demand standpoint. And finally, we'll wrap up the day with some data coming in from the US post markets, that is non-farm payrolls and the unemployment rate. So those are a bunch of events to watch out for tomorrow.
All right, Manglam, thanks a lot for that. Well, on that note, though, we'll wrap up on this edition of Markets Forward. But you stay tuned. More news and updates coming in on the other side.